I've made some significant buys and sells in my $0 to $100,000 dividend portfolio since the last update. I'm going to tell you what stocks I sold and what stocks I bought starting now. How's it going, everybody? Welcome back to the channel. If it's your first time here, this is a series on the channel where I opened up a Robinhood portfolio with $0, brand new portfolio. I committed to putting in $100 every week, and I would buy dividend stocks with the goal of building that portfolio up to a $100,000 portfolio of dividend stocks. I try to update it about once a month. I think it might have been a little longer than that, so I'm giving you the update now because there have been some big changes in the portfolio. To start things off, let's open up the Robinhood app, see where we're at. Our balance in the portfolio is now just about $8,000. We're at $79.53. I don't know, let's see, a month ago, we're up almost $1,500 or 23% over the last month. So pretty good. So up about $1,500 since our last update. And now let's get into the transactions I've made in the portfolio since that update. Now the first transaction I made in this portfolio since the last update, you'll remember Plug Power was the free stock I got from Robinhood when I signed up. If you want a free stock, link is below. I got the free stock, it was Plug Power. I looked into the company, liked what I read, thought they had a lot of potential. So I put $500 in at the time just to test the waters out, try out the Robinhood app a little bit. And that stock has since exploded. I really wish I had invested a lot more than $500 at the time, but hindsight is 2020. What can you do? What I did, Plug Power went to the moon. As you can see here, over the past month, Plug Power is up 75%. Now, extraordinary gains. It is outweighing the rest of my portfolio. So what I decided to do was I'm going to take my initial investment out of Plug Power. So I sold 8 shares of Plug Power at $63 a share to get my initial $500 out of the stock. The profit I've made on the stock, I'm just going to let ride. It's free money at this point. It's not an amount of money that is going to make or break me either way. So let's just see what happens. But since I bought this before I decided I was going to do this dividend portfolio challenge, I sold my initial investment, and with this $500 I sold out of Plug Power, I distributed amongst the prior holdings I had in this portfolio. I won't go over each one I bought, but I put $100 into each stock I bought. It's one I've already owned and talked about in a prior video. So now there is one brand new position in the $0 to $100,000 dividend portfolio that I have initiated since the last update, and that is Jpmorgan Chase. Jpmorgan Chase is the largest, basically #1 bank here in the United States. They're a dominant player in the financial space. They have a great overall business. They have great leadership and management. And it just seemed that their stock was really undervalued. You can see, if we scroll down here to the stats, they're trading at a PE of 15. Even blue chip stocks in this portfolio like Coca-Cola and Colgate are trading in the PE range, in the 20s, 25 to 30 range. So to get a quality company, great leadership here in the 15s, I know PE ratio is only one metric, but there's not very many quality companies out there, especially in this market where stocks only go up, that you're going to find trading at a PE of 15. Not to mention they have a dividend yield of 2.7%, which is a really quality dividend yield. Their dividend is more than safe. So all around, I think Jpmorgan Chase is just a really solid company to invest in for this portfolio. I think the dividend is safe. The dividend will be growing. The share price itself has a lot of room to grow as well. I mean, trading at a PE of 15. Let's scroll down, look at their earnings. You can see here their earnings, their Q4 earnings were way above estimates. They have outperformed estimates for 1, 2, 3, 4, all 5 quarters that are here on the app. So it's not like the business is hurting or anything like that. They're in a great position, and that's the 1,000-foot view of why I decided to open a position in Jpmorgan Chase. So Jpmorgan is a stock I'm feeling pretty bullish on right now. So those $100 a week transfers I've been making into the Robinhood portfolio for the past few weeks have been going into Jpmorgan. So I've got 6.5 shares I've built up. It's almost 11% of this portfolio here I'm building. We're at an average cost of about $130 per share. You can see total return, we're up 1.5%. We haven't owned it that long, and I've been buying in at different prices as it's risen and fallen. But the point is, I feel strongly about this stock. I'm going to continue adding to this position. I don't want it to get too overweighted compared to the other stocks I own, but we'll be buying more as long as the share price stays within a reasonable range. So those are the 2 major moves I've made. I sold a portion of my Plug Power position, opened a position in Jpmorgan Chase, solid dividend stock for the years to come. We can go a quick glance at the other holdings. Let me switch to total percent change, see how we're doing. Yeah, like you can see here right off that Plug Power, we're up almost 600% on. It's kind of weighting my gains and making this this little experiment not so scientific, but hey, we're trying to get to 100,000. The rest of them are dividend stocks. Coca-Cola, we are actually down 2% on. They've been struggling a little bit recently. Cisco, we are up 8%. O, which is realty income, we are basically treading water, down 0.5% or so. Same with AT&T, just treading water there. But those 2, O and T, realty income and AT&T, big dividend payers. So as long as they maintain their dividend yield, I think AT&T is throwing off 7%. O is a REIT, so it naturally has a large dividend yield. As long as they maintain those, I'm not too concerned. If the share price just kind of stagnates, that's fine. Colgate, same thing, we're stagnating. That doesn't have as strong as a dividend, so that's kind of treading water there. Next Era Energy has been a big winner. We are up 16% on that one. Same with Brookfield Renewable, another green energy dividend paying stock. We're up 26% on that one. That's been a great investment. And then, like I already covered, Jpmorgan Chase, we're up 1.5%. That's a quick overview about how the portfolio has been going in the past month or so. I forgot to mention the other big move I made, mainly because I made a whole video about it when I bought it. You'll notice hsbc is missing from the portfolio. I sold my position in hsbc. I only bought a tiny amount of the stock, but I think I bought it in September. In the 4 month or so that I have bought that stock, it went up about 60%. That was a stock I bought just because they had some terrible bad news. I knew the company wasn't going anywhere and would rebound. It rebounded far beyond and faster what I thought it would. And the only reason I sold it is because long-term, going forward, I just think Jpmorgan is a much stronger bank, much stronger company. So I decided I made a good move there on HSBC, sold that, put some of that into Jpmorgan as well, because I didn't want to be too overweight on banks into this portfolio. So those are the moves I've made in the past little while. We are up to almost $8,000 in the portfolio, well on our way to 100,000. We'll get there eventually, I promise, and I will keep updating you every step of the way. If you missed the prior videos, prior updates on this portfolio, you can find the playlist right over here. So please check out those videos. Give this video a thumbs up if you liked it. It really helps me and the channel out a bunch. I'd appreciate it, and I'll see you in the next video.